Hello, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So today, we'll be taking an overview of the entire week, trying to understand what are the key events that are bound to be moving the markets this week, so that we trade from an informed perspective, and of course, we make sure that everyone is prepared. So one of the top news that are currently impacting the markets right now is one, the Reserve Bank of Australia is expected to make a rate decision later in the week. The Reserve Bank of New Zealand, as well as the People's Bank of China. So hello, Etienne, and thank you for joining. I can see Kaz in the house, Rono Hillary, Molenga, Mark. Thank you guys for joining. So let's get things started. So from the economic calendar, you'll notice one thing, and this is the fact that we have quite a dry Monday. As we all know, Monday is usually the driest day in terms of looking for trading opportunities. But eventually, once our markets pick up some momentum, we eventually see some good opportunities. So one key thing to notice is that today is a bank holiday in the US. So the Americans are celebrating the President's Day. So it's also a bank holiday in Canada. So we expect low volume trading. We don't expect any major moves. So far, with two of the major economies having bank holidays, then we might be focusing on the prevailing market trends. And these are trends that started weeks ago and continued through last week. So as of this morning, we have had quite a number of data points. The most surprising one has been the preliminary GDP data from Japan, which came in at 0.7%, way higher than the expected 0.3%, and of course, higher than the previous 0.3%, which was an upward revision from 0.2%. So the GDP price index was up 2.8% expected in Japan. Then later on, we had the revised industrial production data, which was slightly weaker at negative 0.2% compared to the expectation of positive 0.3%. So for the tertiary industry activity, it was up 0.1%, slightly missing the expected 0.2%. So as we continue with the day, we'll be looking at the European trade balance, that is for the Eurozone. There will be Eurogroup meetings starting today. And then we'll have quite a number of speeches, one from German BUBA President Nagel at 2 p.m. We'll have a German BUBA monthly report, and then later on in the evening, we'll have two Fed members speaking, FOMC member Hacker, as well as FOMC member Bauman. So as you can see, all this news for the day, low impact news. So clearly, we should be expecting to see markets moving along the trends that were pre-existing last week. So as we head into Tuesday, we'll be looking at the Reserve Bank of Australia, which is expected to cut rates by 25 basis points from 4.35% down to 4.10%. Of course, this move is expected to be weakening the Australian dollar. So we could be seeing the market reacting to this ahead of time. So even before the announcement, we could be seeing the market trying to price in this information. So we'll also be looking at the UK jobs market. First, the unemployment claims. We're expecting an increase of 10,000. Then the unemployment rate is expected to slightly increase to 4.5%. Bank of England Governor Bailey will be speaking at 12:30 p.m. on Tuesday. Then we look at the Canadian inflation data, where median CPI is expected to have remained stable at 2.4%. So Trump will be having a speech on Tuesday evening, where he'll be interviewed by Fox News together with Elon Musk. Of course, Elon Musk in this case will be representing the Department of Government Efficiency, or what we call the DOGE. So in this case, we expect some fireworks from the interview, and this could be a big market mover. So make sure that you mark these on your journals as well as calendars. So the wage price index in Australia will be released at 3:30 a.m. on Wednesday. Before we get the Reserve Bank of New Zealand interest rate decision, where in this case, we are expecting a 50 basis points rate cut. So this is such a huge rate cut that we could also be seeing the market pricing in this information. Remember, rate cuts are negative for currency. So in this case, we expect the New Zealand dollar to be weakening. similar to the Australian dollar. So moving from 4.25% interest rates down to 3.75% is expected to be weakening for the New Zealand dollar. So we'll also be getting inflation data from the UK. In this case, there is an expectation that inflation may have moved higher from 2.5% to 2.8% in January. So core CPI is expected to have increased from 3.2% to 3.7%. And then producer price index may have increased by 0.7% on the month of January. So we'll also be getting the FOMC meeting minutes. These are minutes of the previous meeting by the Federal Open Market Committee in the US. So this is a big market mover on Wednesday at 10 p.m. Then we get the job report from Australia. In this case, we'll be looking at the employment change. In this case, we're expecting the economy to have created 19.7K jobs in the month of January. Then the unemployment rate is expected to have slightly ticked higher to 4.1%. So as for China, we expect the People's Bank of China to hold rates steady. For the 1-year loan prime rate is expected to be held at 3.1%, whereas the 5-year loan prime rate is expected to have remained stable at 3.6%. So we don't expect much of a change for the People's Bank of China. So for the US side, on Thursday, we'll be also looking at the unemployment claims. These are weekly data point. Then crude oil inventories. These will be super important, especially for oil traders, to see whether the US is increasing its inventories. And these will be a key determinant of the direction that the oil markets take. So the Reserve Bank of Australia governor will be issuing a speech at 1:30 a.m. This is on Friday morning. Then we get the national core CPI for Japan, where we expect inflation to have slightly ticked up to 3.1%. So later on, we'll get retail sales from the UK, and then we'll get the S&P Global Flash Manufacturing and Services PMI for all major economies, including the Eurozone. We'll be getting the same for Japan, for the UK, for the US, and this is also expected to be a big market mover. And then at 4:30 p.m., close to the US market open on Friday, we get core retail sales data from Canada. So towards the end of the week, on 8:30 p.m. on Friday, we will be getting a speech from the central bank governor of the Central Bank of Canada, or Bank of Canada. So Macklem will be issuing a speech about trade structural change and monetary policy at the Oakville Chamber of Commerce in Ontario. So those are the key highlights for the week. As of today, there's quite a number of things to be focused on. So on one side, if you look at the cryptocurrency markets, clearly it seems more of a red day. You'll notice that in the past 24 hours, Bitcoin is down 1.18%, Ethereum down 0.3%, Ripple down 3.78%, and so on. So majority of cryptocurrencies are trading in the negative for the day. So among other key highlights in the markets, Japan's Q4 GDP growth beats estimates. So we'll be looking at this later. So Indonesia trade surplus above forecasts on weak imports. China stocks gain ahead of Z symposium. Then Thailand 2024 GDP growth slightly below official target. Oil holds decline amid increased supply prospects. Japan economy expands at annualized 2.8% in the fourth quarter of 2024, and New Zealand services sector back to expansion. So on the key highlight for this morning, Japan's GDP grew by 0.7% quarter over quarter in Q4 of 2024, accelerating from an upwardly revised 0.4% expansion in quarter 3 and surpassing market expectations of 0.3%. So this backed the third consecutive quarterly growth, driven by strong rebound in business investments, which exceeded forecasts of 0.4% gain. In addition, net trade contributed 0.7 percentage points to growth as exports rose for the third straight quarter despite US tariff threats. While imports shrank for the first time since Q1 2024, in this case, they were down negative 2.1% versus the previous 2.0%. So further government spending expanded for the fourth consecutive quarter, with its pace quickening 0.3% versus 0.1%. Meanwhile, private consumption, which accounts for over half of Japan's economic output, edged up unexpectedly 0.1% versus 0.7%, defying expectations of a 0.1% decline. So clearly a very strong Japanese economy compared to the current monetary policy, which is advocating for further rate hikes, is clearly strengthening the Japanese yen. So on other news, we know that gold has been on a very strong uptrend, hitting a new all-time high last week. So now, as we start a new week, the big question is: will the momentum continue? Will the market continue pushing gold prices higher? So gold price has fallen below 2,900 on Friday. Yet it will end the week with solid gains of 0.8% as traders book profits ahead of the weekend economic data in the US. Sorry. As traders book profits ahead of the weekend. Economic data in the US was mixed, although a greenback touched yearly lows as treasury yields plunged. So gold USD trades at 28.83, down 1.48% daily. So this is a report as of last week showing that after gold hit a new all-time high, we had a big drop happening on Friday. So what's really pushing the gold prices higher? And this is what I want us to explore today. So I'm looking for one specific article here. So this is from Sky News. So the Bank of England gold rush that's pushing up the price. So deep under the Bank of England, in a network of vaults into which cameras are rarely admitted, sits the world's second biggest known trove of gold. So they hold quite a huge amount of gold as a custodian. And in this case, we have seen a lot of migration of this gold from the UK to the US as traders have been afraid of potential tariffs on metal imports. We have already seen Trump imposing 25% tariffs on aluminium as well as steel products. We don't know whether these will extend to gold. So if you look at the gold as of today, or as of the writing of this article, London still had a very huge amount of gold held in custody. In this case, we're looking at 8,535 tons of gold compared to New York's 7,493 tons of gold. So the movements are a symptom of a deeper financial issue. Traders are fretting about the possibility of Donald Trump imposing tariffs on movements of precious metals into the US. The preemptive trades have seen a sudden sharp rise in the amount of gold held in New York, not just from London, but also from elsewhere around the world. However, repatriating gold is no simple matter. Moving it in and out of vaults takes time, not to mention security, and the gold rush has led to a shortage of logistics options. Adding to the complexity in the fact that the bank's vaults are not really designed to cater for large-scale inflows and outflows, so simply getting bars is not easy. So last week, the Deputy Governor, Dave Ramsden, said that gold is a physical asset, so there are real logistical constraints and security constraints. It takes time, and the staff is also quite heavy, as you know. So the upshot is there is a multi-week wait for anyone wanting to remove gold from the bank, which in turn has pushed up the price of gold in London. Talking to Sky News last week, Andrew Bailey, who is the governor of the Bank of England, said that London is a very important gold market. We have seen a movement in the relative price of gold in London and New York in recent times, and that is causing some gold to be moved to New York. Not vast, it's under 2% of our stock. So while they maintain it's about 2% of the gold stock that has moved, you can clearly see that the US gold holdings have only been moving higher. So comparing this chart from 2022, you can see that New York gold holdings have been long-term moving downwards for a period of 3 years. And now as we enter 2025, we are just on the 17th of February, and you can see a very strong rally. So obviously, you have to have a lot of security and a lot of insurance around moving gold. So you can't just put it all on the back of a lorry and take it away. So it has to be planned. So there are constraints because of physical constraints, but we have got slots for all gold people want to move in and out. So clearly, this has been a major headache for a lot of traders, and this has added a premium to the price of gold, and that's why we are seeing a very strong rally. So that aside, the next Fed meeting will be happening 30 days from now. So that should be on the 19th of March. And so far, the market is maintaining a very strong expectation of 97.5% that the Fed will be holding rates steady at the current rate of between 4.25% and 4.50%. So outside of that, if you look at currencies and how they are performing, today, the strongest currency in the market seems to be the Japanese yen. And if you look at the last week, Japanese yen still maintains the lead. If you look at the last 1 month, Japanese yen is only second to the UK pound, which has made some good recovery. And if you look at the year-to-date performance, the Japanese yen is the biggest gainer in the market, having gained 3.57%. So now, knowing what we know and what we have seen with the Japanese economy being really strong and the Bank of Japan considering more rate hikes, then there is that expectation that we could continue seeing the JPY being strong against other currencies, and that could be the leading currency for this week. So if you have any questions related to the presentation, feel free to type them in the comment section and I'll be responding as we continue. So just give me a sec. So I'm just checking the comment section here. So there is quite a number of questions. So one is from Oscar. What are your views on the euro in regards to incoming German elections with AfD rules on immigration? That's a good question. I'll be checking other questions. Which way for gold price? Are we likely to see a rate cut for Fed this year? Does USD Swiss franc continue with a downtrend? Good question. I'm wondering where USD is being easily weakened, though Trump's actions are inflationary and the data released is showing hawkish stance by the Fed, save for retail sales on Friday. Why is it the case? And good morning, Gashago. So let's begin with this question here. I'm wondering why the USD is being easily weakened, even though Trump's actions are inflationary, and the data released is showing hawkish stance by the Fed, save for the retail sales on Friday. Why is it the case? So one of the reasons that the dollar has been weakening is because of what we have seen with the US treasuries. Just give me a sec as I look to answer this one. All right. So for the first question, as you can see on my chart, this is what we are seeing with the US 10-year Treasury bond yield, with the highest return being on the 14th of January, where we saw above 4.81% return on bonds. So this has suddenly crumbled, and all we are seeing is a downside momentum, and the current return is 4.48%. So this sudden drop in bond yields is currently contributing to the weakening of the dollar. So if you look at the dollar performance since the 14th of January, clearly all we have been seeing is the dollar weakening. So yes, we had that positive performance, and that positive performance in the dollar was based on the impact of tariffs, but immediately Trump imposed tariffs on Canada and Mexico and China. There was a lot of negotiations, and those tariffs were removed immediately or basically put on hold until a further date. So some of the premium we had seen on the dollar was removed, and the dollar started weakening yet again. So another question, would you kindly number the episodes of Novice to Pro in the order of advancement, please? In this case, for Novice to Pro, yes, I would consider this. The other question here, are we likely to see a rate cut for the Fed this year? So given the inflation data that we saw last week, but one, which showed an uptick in US inflation, it's becoming more unlikely that we will be seeing further rate cuts. So unless inflation continues moving to the right direction, it seems that the Fed rates might continue being held higher for longer. So that's why we have this expectation here showing that the Fed is expected to hold rates at the current level. So in a case where we would be expecting rate cuts, then there would be more probability of perhaps the Fed moving to between 4% and 4.25%. But as we speak right now, the market is pricing in 97.5% probability that on the next meeting, we don't expect a rate cut. So which way for gold price? There's quite a number of factors to consider. So on one side, we mentioned last week that gold has been trading on a premium as investors were looking for safe haven bets, especially considering the geopolitics of Israel, Gaza, and Russia, Ukraine. So now that negotiations are supposed to start this week in Saudi Arabia, where Russia will be negotiating with Ukraine, with US trying to be the mediator. In this case, there is a very strong expectation that the war in Ukraine could end shortly. So in that case, without expectation that the war would come to an end, that premium of on gold is being removed. So as a result, we have seen gold moving further back downwards. However, if you look at the demand and supply of gold, there has been this big fear that Trump could impose tariffs on gold. And this has led to a lot of investors moving gold, not just from London, but also from other countries towards the US in anticipation of a potential tariff. So as a result, this has created a very strong gold demand, leading to price pressure towards the upwards. And as soon as last week, we saw a new all-time high in gold. So I expect this trend to be continuing. So I don't expect much of a change in the trend we have seen in gold. So this could as well be the direction we are expecting to see. So hello, Manabasto, and thank you for joining. So the other question is from Oscar. What are your views on Euro in regard to incoming Germany elections with AfD rules on immigration? So as for the Euro, we don't expect much of a pressure. So the direction of the Euro is majorly determined by the European Central Bank. And as far as we know, there is that overall expectation that we could be seeing further rate cuts this year. So compared to the dollar, where we're expecting the Fed to be holding rates steady on the oncoming month and perhaps even on the next month, then the overall expectation is that the dollar could at least hold some value. But for the euro, we don't expect that much of a strengthening. So while we're experiencing currently a very strong rally on euro and pound pairs, especially last week, at some point we expect these moves to be reversed. So, and this could be happening as soon as this week. So that's why, as I mentioned, a key focus, especially for USD traders, is the FOMC meeting minutes that will be released later in the week, and of course the interview on Fox by Trump as well as Elon Musk. So I believe I've answered a majority of the questions, and now we can do some technical analysis to try and understand what are the key market formations or structures that are very important to trading this week. So one thing to start with is that the Nasdaq 100 index hit a new all-time high, and this was as soon as Friday last week. And then today being Monday, we are seeing the Nasdaq extending this rally. So the Nasdaq has never traded this high before. Even if you go all the way back to 2019, you can see that the overall trend has been a bullish momentum, and now we are seeing a new all-time high. So the stock market index that basically tracks US tech sector, or the top 100 tech companies in the US, after breaking above a new all-time high, we are now seeing some form of pullback. So this is quite normal and expected. So whenever you see a big breakout, sometimes we experience these breakout retest continuation setups. So we could be seeing the market retesting the area and potentially moving higher. And this could be happening as early as today, given that the current price action level is the previous all-time high that we had seen back on the 16th of December last year. So in this case, more likely momentum is expected. So it's a key market to be observing today. Even though the stock market will be closed today due to the President's Day, the index continues trading. So we could be seeing low volatility for today, but tomorrow is a likely day where we could be seeing a continuation. So strong positive correlation. Also, we saw the Dow Jones making a strong bounce last week and then pulling back on Friday. So this week could be seeing some kind of sideways momentum on Monday, which is a quiet day, and then more activity on Tuesday. So same case for the Russell 2000 and the SP 500 index. So as for SP 500, key thing to note is that it's trading at a major resistance area. So notice how it was unable to break this area previously. And now we are wondering whether the market will be breaking above this area or not, moving into a new all-time high. So we'll be observing the current price action, watching and observing for a potential breakout. But for now, being a public holiday or a bank holiday, in this case, we expect the market to remain sideways until we see some form of momentum coming in. So for now, it seems like a market that is just moving sideways. So more or less like in a triangle formation, but eventually we'll be watching to see whether there will be a breakout. So on the other hand, if you look at the Bitcoin market, it has been ranging for the last, I would say, 3 weeks. So nothing much of a performance here. So we'll be looking to see if there's any breaches of the resistance or the support here. Support being 94,742 and resistance at 99,729. So for now, the market remains sideways. So for the dollar index, you can clearly see there was a big jump. This was on the date 31st January. And then the dollar index moved further back downwards, erasing all the gains. And then last week, we had this continued momentum downwards, indicating that the dollar index was erasing a majority of the gains that it had made after the Trump led the elections in November. So this bearish momentum is being reflected in the bonds market, but as we all know, the dollar doesn't get hammered for long. So for now, the overall expectation is that the dollar may bounce from the current price level and start moving higher. So if you are a short-term trader, you can already see that the technicals are indicating that the dollar index is really failing to form a new low. So as of today, the lowest price we saw in the Asian session did not go lower than the lowest price we saw on Friday. And of course, this could be an indication that the dollar is just about to bounce. So that being said, if you look at other majors, for instance, Euro USD, which had made a very strong rally last week, is already making a reversal. We can see momentum coming in here from the sequence of the candlesticks we have seen this morning. And this could be a potential move for the rest of the day. It's the same case for the pound. If you go to a smaller time frame, let's say the 1 hour chart, clearly the pound made a very strong rally last week. And now today we are not seeing much of that movement. So eventually we could be seeing the market breaking lower, and that could be an indication to go short. And then for Australian dollar, it's the same thing, a very strong rally last week. And now in the last 1 hour or so, we have seen sellers beginning to come back into this market. So as for USDN, we expected a very strong drop last week, having hit this resistance area. You can notice the trend line we were using last week. So since we got to this area, we had a breakout. I remember we talked about this, and the market continued dropping on Thursday and Friday, but we didn't quite get to our target, which was 150.955. So as of this morning, there was a continuation of the drop, but now, even if you look at the 15-minute chart, you can see that buyers are beginning to come back, and in this case, a potential reversal could be playing out. So for the Nikkei 225 index, it remains on this range. So we wait for the price to get on either of the edges. Then for the most important asset in the markets today, this is gold. We saw a very strong top happening on Friday, where the overall expectation was that gold would break into a new all-time high. So the previous all-time high was hit last week, and this was 29.42, and this happened on the 11th of February. So after we got to this area, market pulled back. There was a very strong bounce here. We talked about this last week, and this was a nice opportunity to buy in. So the market rallied for 2 consecutive days, and then on Friday topped around 29.40, This was the highest price we saw on Friday, 29.39. And then the market dropped all the way down, forming a neckline here. So a neckline is a support area that has been tested a second time. In this case, forming the very common pattern that we know. It's called double top formation. So this was the first top, and the second top is right here. So a double top formation is often taken from a technical perspective as what I would describe as a weakness in the trend. So in this double top formation, we also have a break of the lower trend line, meaning that in this case, the bullish momentum that we had seen previously is now weakening. So does this mean that we continue moving higher, or are we going to get into a reversal? So in most cases, especially from a technical analysis perspective, we tend to see markets breaking a major trend line and then retesting the trend line before making a continuation. So this is playing out as expected, as a book pattern. And now from this area, what we're expecting to see is now the market forming going for a new low. So notice that before this, we had a sequence of the market forming higher highs. So every subsequent high was getting higher and higher and higher. And now we got a high that was slightly lower than the previous one. And then the low here was clearly below the trend line and slightly higher than the previous one. But then if we get another lower low, then it could indicate that gold trend has changed. So that's one of the possibilities. The other possibility is that the market may have entered a range. So a range is a period of time when the market is moving sideways. So you also have to think about this. The market is now moving up, down, up, down, up. So in this case, we'll be observing to see whether there will be a drop and a break of this trend line here, or whether the market continues and gets into a range. So the range will be confirmed if the market gets to the previous high. But for now, we observe patiently to see if the market will reject this resistance and move down and form a new low. So that hasn't played out yet. So in this case, I would be more inclined to believe that the strong momentum that we saw earlier this morning could be a projection of the biggest move for the day. And since it's a quiet day where we have public holidays, the stronger expectation is that the market moves sideways for the day, with limits being the day's high and the day's low. So this being the day low and the day high 29.05, day low 28.78, it's more likely that since today is a holiday, we continue seeing the market moving sideways within those ranges. But then as the week opens up and we see more activity, then we'll be confirming whether this is the reversal or whether the market enters into a range and gets to the previous high. So oil seems to have found some very strong support, and this has played out along this area here. So several times that the market was unable to break below this level. That's $73.921 per barrel. And now this morning we are seeing a strong bounce from the same area. So looking for potential targets, we could be looking at Friday's high. So the highest price that we saw here on Friday could as well be the target as oil bounces towards the upper side. So we could be seeing the market retesting that area. For the dollar trading against the Swiss franc, I believe this was a question that was raised in the comment section. We are seeing the market bouncing off a very strong support that was on the 4-hour chart, and even on the 1-hour chart is the same thing. So it seems like the dollar is recovering pretty well across board. In this case, against the Swiss franc, we basically retested Friday's low, and the market has only been pushing higher. So even though it's on low volume, even if you look at the candlesticks, they are really small candlesticks. At some point, we could be seeing volatility coming back into the markets, but the overall expectation is some form of dollar recovery happening today. So as for New Zealand USD, clearly we had a major trend line here. So the market made a very strong rally last week and got to this trend line hitting a major resistance area. And then from the 1-hour chart, once we go to that area, you'll notice that the price action this morning, we opened with a gap, market hit the area, and now it's reversing. So clearly, as the dollar regains some strength, we could be seeing the market moving back to previous highs. Potentially, in this case, we could be seeing the New Zealand dollar losing to the dollar to around 0.57021. So as for USD CAD, clearly what we are seeing here is a dollar that has been really losing to the Canadian dollar, a very sharp drop in the last 2 weeks, and then in the last week, a continuation of the same. But now, as I mentioned, the dollar doesn't stay beaten for a long period. In this case, we are seeing the potential for the market breaking outside of this pattern. So the pattern began on Friday, and this was the resistance, and of course, the support was somewhere along this area here. And now we are looking at a potential breakout that would imprint some form of dollar recovery against the Canadian dollar. So we'll be observing this to see if this plays out, and we continue seeing the dollar strengthening. So I believe we have covered everything for the day. So nothing much of an expectation. So it's a pretty dry day. So let's check on the comment section to see if there's anything else I missed. So after the hostage release failed, Trump told BB to do what he likes. Can this push oil high? Well, I expect the biggest market mover for oil this week to be the US crude oil inventories, as we saw on the calendar. So from the geopolitical side, I don't expect much of a change from this. So more movement from oil prices could be as a result of what we see as the US crude oil inventories indicate. So if there's an increase in inventories, of course, oil prices move lower. And of course, if there's a decrease, then we move higher. So what's the sentiment on silver given the positive sentiment on gold? So these are really good questions. So from what we have seen in silver, while gold was hitting new all-time highs, silver has not been particularly doing really well. So while gold made a huge drop on Friday, also silver made a huge drop. But if you go to the daily time frame, you will notice that it was not a new all-time high. So the daily candlestick was more indicative of more shorts incoming. Nobody is withdrawing silver from London. It's mostly traders basically withdrawing gold. So this particular candlestick here is very indicative of bearish momentum. So for the day, I could be expecting to see further downside momentum on silver prices, given that that was a very strong pin bar on the daily time frame. So from the 15 minutes chart, this is how the price action looks. So an attempt to move higher was met with a big drop later in the day. And now we are seeing silver really struggling to move higher. So given the price action that we saw here, and this was a major resistance area, we could be seeing silver prices moving a bit lower as we continue with the week. So checking to see if I've answered all the questions. Why DXY can't trade on the platform? So mostly the dollar index is used as an indicator to show what we call the strength of the dollar versus a basket of other currencies. So we use it as an indication to try and understand the trends in the dollar. But then when you're looking to execute a trade, if you expect the dollar to be strong, then you buy it against a weaker currency. And if you expect it to be weak, then you short it against a stronger currency. And as we have seen today, the expectation is that the yen continues being the winner for the day. So one last question here. When the Reserve Bank of Australia cuts interest rates tomorrow, the obvious action is weakening of the Australian dollar. Considering the cross correlation with New Zealand dollar, can we expect the New Zealand dollar to weaken a lot with its own cut happening a day later? Actually, this is a really good idea that if you're expecting the Australian dollar to be weakening, which is in positive correlation with the New Zealand dollar, and we also expect the Reserve Bank of New Zealand to implement a much bigger cut, then shorting the New Zealand dollar might be an idea going ahead for the week. So we could be seeing some crazy moves happening later this week, especially on New Zealand dollar. So one particular currency pair to be considering would be the Audi New Zealand currency pair. In this case, since we expect the Reserve Bank of New Zealand to be making a much bigger cut compared to the Reserve Bank of Australia, then the overall expectation is that the Australian dollar gains against the New Zealand dollar. So we could be seeing the market retesting this area. However, for Audi USD currency pair by itself and the New Zealand USD currency pair by itself, both are expected to be weakening against the dollar. And considering that, for instance, the New Zealand dollar started the week on a major resistance area, then a sharp drop from this area could be playing out. So let's continue observing the charts and see whether we'll be seeing some form of momentum on the New Zealand dollar as we continue with the day. And of course, Tuesday will be a big day. So that's it for the day. Thank you very much, everyone. Remember to check out the latest episode of the Bullish Banter podcast. It's available on FXPesa YouTube as well as on all other podcast platforms. So also, if you're just beginning your trading journey, remember to register for a trading account. The link is available on the description below. And of course, if you're watching this on X, just visit the FXPesa handle. Then from there, you'll get a link to register for a trading account. On top of that, also remember that if you're just beginning your journey and you don't know anything about trading, you have to invest some time in learning. The way you do this, first we have a beginner course. It's called the Novice to Pro series. It's available on the FXPesa YouTube. You can check it out right now or later. And of course, once you go through it, keep learning. And once you understand how to trade, you gain the skill, then you can potentially get into live account trading. So that's all for today. I hope you have an enjoyable day. I also hope that you learned something today. And of course, I always appreciate when you drop a comment, when you drop a response, when you drop a question, and also when you share these videos with other traders so that they can also trade from an informed perspective. So that's it for the day. Enjoy the rest of your day.